Well, for the time being, let's move on to our corporate that's standing by. Bajaj Electricals, well, they posted a weak set of numbers. High inflation, some stress in rural markets as well led to low offtake. That's what impacted their consumer product segment. Though the gross margins, they expanded aided by the lighting solutions business. Mr. Anuj Podar, the MD and CEO of the company, joins us. Hi, Anuj. Morning. Thanks so much for joining in. Well, you have been talking about gaining market share. Now, I'm looking at your consumer products business. There's a small degrowth out there, so it's unlikely you gain market share out there. Could you tell us, what went on? Has there been any movement on the market share? And also, I don't think you're cutting prices big time. So then, could volumes get hit? In that case, again, you'll not gain market share. Give us some clarity on this front, Anuj.
So, firstly, let me address that straight on. We are gaining market share. And the important metric to look at is look at a 3-year CAGR. It's about a 14.3% for our consumer business. And, that's well ahead of average industry and well ahead of some of our peers. So there is a gain in market share. Number two, you have to remember, we are in a tough environment. Demand is soft. So some of that's baked into our numbers in terms of top line and revenue. But we've tried to hold on to our profits. If you look at on an aggregate basis as a company, we've delivered better PBT. Again, if I break that up into our segments, in fact, lighting is, I would say, the highlight for us this quarter. We've come back very strongly in lighting. We've been talking about that for a while, that we plan to grow and resurrect our lighting business. Our profitability on lighting has come out very strong this quarter. The EPC business, which used to be loss-making for a long while, again has delivered profits for us this quarter. Finally, the consumer business that you refer to, yes, there has been some decline in revenue and profits, but relative, I would say we've done a fairly good job on containing some of that decline in profits and margins. And some of that, I think, is a carry forward of the legacy high-cost inventory due to commodity inflation. We are very confident that Q3 onwards, you will see a reversal on the inventory cost, and therefore margins will bounce back from Q3 in consumer business too.
Good morning. Has that high-cost inventory, where is that at? Is it mostly all run out? And so then what, because you indicated at the end of the first quarter also that margins will start to improve. It has at a EBITDA level. And you're guiding that they will improve more Q3 onwards. So if you can tell us, where is that high-cost inventory at and what are margins going to look like 2-3 quarters out?
So that's correct. So firstly, if you look at sequentially, our margins are better off. If you look at Y on Y, they're slightly lesser, but you have to bake in the base effect on that one. The inventories are not 100% exhausted, but I would say a majority of that is exhausted. So you will see the uptake in the margins due to inventory, incremental inventory being at lower cost in Q3, and by Q4 it should fully normalize. So I think you will see a marginal uptake in margins in Q3 and a healthy uptake by Q4. We're very confident on that. And keep in mind that the lighting business also is now coming together and adding to the margins. So overall, on a company basis, our margins will continue enhancing from here fairly strongly. I'm confident about that.
Particularly for the consumer products business, the margins have fallen quite a bit. I mean, you used to do double-digit margins, 10% plus same time last year, and now it's about 7%. When you say it will get better, purely for the consumer products business, when do you think you can get back to double-digit margins?
So Sonia, firstly, I would defend ourselves saying if you look at the drop in margins Y on Y, it's the least versus competitors. You must keep that in mind. Secondly, the double-digit, we've been guiding, we will expand our margins by 1 percentage point per annum. You must look at that on an annualized basis because we are investing for the future. So very clear on the roadmap for that. But, without putting a specific projection, I think we should be able to beat that guidance over the next 2 years. Yeah.
Okay, all right. And Anuj is saying even this year you have gained market share. The 3-year story, I got it. You have gained market share. So even in this year, you're saying you've gained market share, right?
Yes, we have. Okay. And, if you look at our rural versus urban shares, the mix is different versus competition. Rural is soft right now from a demand cycle. But if you split that up, actually, we've gained market share in both of these markets. And the way it aggregates for us is slightly different versus competition.
For you, what is the split?
I'm sorry, I could not.
For you, what is the split of rural and urban?
But it's a very, very high double digit, almost 2x of other competition.
No, what is the split between rural and urban?
I'm sorry, your audio keeps phasing out.
From your perspective, Anuj, what is your mix between rural and urban?
Yeah, so my rural mix, we don't put out firm numbers, but it is a very, very high double digit, and that's almost 2x versus competition. So therefore, our weightage on rural is much higher. So the rural economy is weak. There is a slightly exaggerated impact on us, but I think we are only about 1 quarter away from rural markets coming back, and that should help us.
Right. Are
Okay.
you saying that your rural exposure is twice that of your other competitors? I mean, other players. So heavy dependence on rural. Two questions. One, what gives you the confidence that markets will come back strongly? Because, I mean, across sectors, across categories, companies have been telling us that rural and entry-level segments are suffering. They're faring poorly. So just some guidance would help.
So, we've been seeing that for the last 4 quarters, where it's a premium segment that is really firing for companies. And the, middle class or the rural segment is not doing so well. I do think, you should be at the cusp of turnaround on the rural. And I use some of the primary indicators of some of the FMCG companies, including the biscuit guys, etc. They're starting to see some traction from the commentary that I hear on the rural. The other interesting data that I saw yesterday or day before is the jobs data put out by CMIE. The jobs are finally back. I'm talking the organized sector salary jobs to about 32 months ago. That is pre-COVID levels. I think that's really good for middle class because that's the pure or core consuming category of people. So that comes in. I think it's not just a premium segment, but the middle mass segment which we cater to, that should come back in terms of demand.
Which
All
very
right,
quickly,
just one question that.
Yeah, all right. Anuj, very quickly, just wanted to squeeze in the demerger date. You had told us last time that it will be in the second half of this year. By quarter 3, quarter 4 should get done?
So we were hopeful to get quarter 3, but these are pending approvals from SEBI and NCLT. My best estimate at this point of time, it should happen by Feb or March.
Okay.
But the ball's very much in the court of the authorities. We are just simply awaiting of approval. As soon as we have approval, it's an instant demerger.
Okay.
All right. Anuj, we'll leave it there. Thank you very much. Good luck. Appreciate you joining in with that perspective. Thanks very much. The pre-open is settled about 0.5% higher. 18,288 is where we are likely to start. But as we've seen